If you've ever felt confused about why price reverses out of nowhere, or you're tired of just chasing trades that fake you out, this video is going to be a game changer. Today I'm going to be breaking down SMT divergence, or smart money technique divergence, step by step. I'm going to be walking you guys through the logic, the setup, and exactly how I use it to catch high probability trades. And basically this is going to be the tutorial I wish I had on SMT divergence when I first started. Hey guys, right before we get into this video, if you guys are new to the channel, what's going on? My name is Tursonz. If you're new, just hit a like, hit that subscribe button, and comment down below when you first started trading. All right, I'm curious to see when you guys first started trading. All right, but anyways, let's get straight into this video. All right, first thing when it comes to SMT divergence, right? Let me just give a basic breakdown and explanation of what SMT divergence is. It's basically when you have two correlated pairs or two of the same indices where they show different behaviors at a key level. So what do I mean by that? So first off, what the heck even is a correlated pair? You know what? Let's go into 3 steps, right? There are 3 steps when it comes to an SMT divergence. Step 1, find 2 correlating pairs / assets. Okay, so let's actually get into step 1. What the heck is step 1, right? What do I mean by correlating pair / assets? What is a correlating, or what does even correlating mean? Correlation, right? Basically, correlation is when 2 things, in this example pairs or indices or assets, are moving in the same direction, right? So what do I mean by that, right? So we have 2 completely different pairs, and say if the market is in an uptrend on one pair, then on the other pair we're also going to be in an uptrend, just like this. All right, so it's basically going to be exactly like this. You see how this is one pair itself and this is another pair itself. So now you have to find out what pairs correlate with each other. Now I'm going to tell you, for the sake of this video, and just to tell you right now what I use personally. I trade on NQ, which is the NASDAQ, but I know that NQ's correlating pair is ES, which is the S&P 500. So now I'm going to show you in real time and real examples side by side of how this works. But basically, a correlating pair is when one pair moves in an uptrend and ES, the correlating pair of NQ, also moves in an uptrend. So if we know that they correlate, so say if NQ was in, let's say if NQ was doing something like this and we were in a little mini downtrend, how would the ES chart look, or generally look? It's not going to be exactly the same, but for the most part in the overall direction, how do you think ES is going to look like? Well, we're actually going to be similar to NQ, because why? They are correlating pairs, right? Now I know I'm just telling you this and you guys are taking my word for it, but I'm going to show you exactly too, right? So ES is actually going to also be in a nice little downtrend, right? So now let's actually look at the real charts. Right here on the left side we have the NQ chart, and on the right side we have the ES chart. So I told you guys that these are 2 correlating pairs, and basically a correlating pair is when price just moves in the same overall direction, right? So yeah, let's actually go to the daily time frame to show you. All right, it is basically, if you guys don't know, NQ and ES are basically the market, but let's actually go all the way over here. As you can see on the left side, what is price doing? We're in a clear uptrend. Price is going up, higher high, lower low, higher low, higher high, higher low, higher high, higher low, higher high, higher low. We're in a clear uptrend. Price is clearly going up, right? So if we know that the NQ chart is going up and we know that NQ's correlating pair is ES, what do you think the ES chart is going to be looking like? Is it going to be in an uptrend or a downtrend? Well, since it's a correlating pair with NQ, it's obviously going to be in an uptrend, right? So right over here on the left side, NQ is in an uptrend, and ES over here. Wait, what kind of trend is this?
Bullish.
What kind of trend is this?
Bullish.
All right, so what does this mean, right? We're talking about SMT divergence.
Yeah, I know that.
All right, what do you think SMT divergence is?
Divergence
Mm-hmm.
is when it's going down like this instantly.
No. So ready? When it comes to divergence, it's when the first step is to find two correlating pairs. So what is a correlating pair?
The things that look the same.
They look exactly like similar, right?
Yeah.
So these are two different pairs right over here. So NQ is in an uptrend. So what is ES going to be?
In an uptrend.
An uptrend. So when NQ is in a downtrend, what is ES going to be in?
Downtrend.
Exactly, a downtrend, right? Right there, that's the step one. That's what you have to do to identify.
So why don't you just copy it?
Find two correlating pairs. But a divergence is when there's a little discrepancy, right? Where price, so you see how they're in the same direction?
The movie, oh my god.
Yeah, exactly.
Because the divergence were different, and that's why they wanted.
As you guys can see, that was a pretty good explanation right there. Yeah, so that's right there is your correlating pairs. Now let's get into the next step. So now, as you guys saw from that example right over there with the special guest, my clone, but yeah, right over there, that's finding a correlating pair / asset. Okay, so now when we have that right over there, we're gonna go to the NQ chart, and as you guys can see, they're in overall the same direction. Now let's actually go and let me actually draw out a trend for you. So let's say, for example, on the NQ chart, price is in a bullish trend, so we're making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, right? That's on the NQ chart, right? And then ES right over there is also making the same exact thing: higher highs, higher lows, higher highs, higher lows, higher high, right there. Now this is actually something that we want to look for. So we want to look for a discrepancy, right? What is a discrepancy? Is when they have something that's not similar, where it's not correlating, where we're not making the same higher highs and same higher lows. So for example, right, let's say NQ over here comes down and takes out this high over here right then and there, so we continue the overall bullish trend. But now on ES's next leg, we come down to create the higher low, and then we come over here, but we never take out this initial high. But on the NQ chart, we did take out that high. Right then and there, guys, is your SMT divergence, right? There's a little divergence right there showing that ES is showing signs of weakness, which is also showing signs that the market is ready to reverse and go down the opposite way. So now we're in this uptrend over here. So now we could actually use this as a sign or a confluence to actually continue going short and reversing the market, right? So now we could actually expect to see the market go in the opposite direction, right? And now there's two things that I want to note down about SMT divergences, right? There's two types, right? What is the first type? There's bullish SMT divergence, and there is a bearish SMT divergence. You can only have now when it comes to a bullish SMT divergence, so let's actually break this up. Let's actually break this up into two things right over here. Let's break it up. When you have a bullish SMT divergence, what does this mean? You can only have a bullish SMT divergence. This is only possible when you are at the highs. When you are at the highs, or you are taking out buy side liquidity, right? Buy side liquidity, right? You can only have a bullish SMT divergence when you're at the highs. Now, what do you think a bear? Oh, wait. I'm sorry. At the lows. Guys, scratch that. This is only possible when you're at the lows and sell side liquidity. See, even I got mixed up. So you guys, I want you to note this down. A bullish SMT divergence can only happen at the lows and at the sell side liquidity. I know it's kind of the opposite, right? You have bullish in the name, but you're at the lows, at the bearish side. You're on prices down. So now, what do you think when we have a bearish SMT divergence? What would it be? Well, it would be very, very similar to this. A bearish SMT divergence is only possible when you are at the highs slash buy side liquidity. Okay, now let's actually explain what that means, right? So right over here we have an SMT divergence, right? So how would you actually mark this out? Me personally, I mark it out with a line like this, and I have my template saved SMT like that, and then on the ES chart I do it like that, right? Template SMT divergence, right? So what kind of SMT divergence is this? Is this a bullish or bearish SMT divergence? Well, let's look. Where are we? Are we at the highs taking out buy side liquidity, or are we at the lows taking out sell side liquidity? Well, we're at the highs, obviously, because we're in an uptrend. We're at these highs taking out this buy side liquidity. We didn't take out this buy side liquidity, so we're gonna have this right here is a bearish SMT divergence. All right, so I want you guys to note this down. It is only possible to have a bearish SMT divergence like this when we're at the highs. All right, so now let's give an example of how a bullish SMT divergence would look like, right? So we can go and we could take out our trend line. So a bullish SMT divergence can only happen at the lows when you're taking out sell side liquidity. So right there, we're in a downtrend, 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 and then right over here, downtrend, downtrend, lower lows, lower highs, lower lows, lower highs, and then this is the NQ chart, your two correlating pairs. Then this is the ES chart. ES chart right over there. This is your so this is actually your correlating pairs. And now how do we have an SMT divergence? Right there, bang, bang. We take out this high, continue the overall trend. But what does ES do? Bang, bang, like that, guys. So now this right over here is a bullish SMT divergence. Why? Because it's only possible when we're at the lows. So let's mark out our SMT right over there, template SMT, and you could use this as a reversal sign. Beautiful, beautiful. And SMT divergence. Now guys, there's actually one thing that I also want to note down, and I want you guys to note this down too, and it's a huge misconception when it comes to trading SMT divergence. A lot of people think only NQ can continue taking out the high or the lows, while ES doesn't. No guys, if this is the scenario, right, where NQ doesn't take out the low and we continue going up, but ES takes out the low, this is still a bullish SMT divergence, right? Instead, right over here, we just mark it out like this. ES took out the low, while NQ did not. It's the same exact thing, right? These are both valid SMT divergences, all right? So that's a huge misconception, that it doesn't matter which pair takes out the low slash high, all right? So even here on this example, right here we have NQ taking out the high, but it could be like this. NQ doesn't need to take out the high, ES could take out the high, and we still have a valid SMT divergence. Does that make sense, guys? I hope it does. All right, and right there, template SMT divergence. All right, that is your SMT divergence. Okay, now there's also some necessary steps on what valid SMT divergences are. All right, now when it comes to finding a valid SMT divergence, right, because you're gonna start seeing this a lot. What are some valid SMT divergences? All right, now a lot of times you're going to be on the 1 minute time frame, or on the 2 minute time frame, or the 5 minute, and you're going to see so many SMT divergences, and you're going to think each one is valid. But that's not the case, guys, right? And you only want to use SMT as a confluence, right? Maybe some of you guys want to use it as an entry model, or as soon as you've seen SMT, but honestly, it's not really going to be the best. Up to you if you want to do that. I would back test it, but me personally, I use it as an extra confluence. All right, it just gives me more confidence that my already SMR model, if you guys don't know that, watch my other YouTube video. It's an hour long, very full step-by-step guide of my exact trading strategy that has made me $20,000 in one single trading month. It has actually helped many of my students get payouts and pass their prop firm and funded challenges. Okay, but let's talk about some valid SMT divergences. Guys, you're gonna see so many in like a range or at the 1 minute. That's too zoomed in. You only want to have SMT divergences at key levels, right? So what is the key level? So at key levels, of liquidity. And I'm going to make a separate video on what key levels of liquidity are, but in summary, a key level of liquidity is previous day highs slash lows, PDH slash high slash low, London slash Asia high slash low. Also higher time frame POIs. So what is a POI? Like a fair value gap, maybe an order block. I don't trade order blocks, but at these higher time frame levels. All right, so you only want to find valid SMT divergences at these levels, right? At maybe at a previous day high slash low, or in a higher time frame point of interest, like a fair value gap, right? So yeah, let's actually look at this on the charts, right? So how's this going to look? A little bit more in, and let's go to the 1 minute time frame and see how it would work. So right over here, as you guys could see, look what happened right over here. On the NQ chart, price came over here. We were in this uptrend. So as you guys can see, we're in the correlated pairs, uptrend, uptrend, ES, uptrend, uptrend. And now right over here, you could see we have this high over here. This is the high that's in question for the SMT divergence right over there. Now, as you can see on the NQ chart, we have this high, and on the ES chart, where's the same high? It's over here. Bang, right over there. So that's 733 high. Okay, now what are we looking for? We're looking for one of the pairs to take out this high while the other pair doesn't, and that would be a bullish or bearish SMT divergence. Well guys, it would be a bearish one, because remember, you can only have a bearish SMT divergence at the highs. All right, it's impossible to have a bullish SMT divergence at the highs, right? I know it sounds a little contradicting, but that's just how it is. So right over here, you could see NQ took out this high right over here. On ES though, look, we never took out that high. Let me move this down a little. As you guys could see on the ES chart, price came down. On the NQ chart, price came down. We came up, took out this high, but on the ES chart, we came up, but we never took out this high. And look what price did. Absolutely dump on both charts. Just dump, straight dump. And right there is your smart money reversal. All right, so that right there is how you could use SMT divergence, and you could find an entry model right over here. We have a nice bearish SMR right here, liquidity sweep, market structure shift, return to fair value gap, and price just absolutely dumped. Right? Beautiful SMT divergence. Now let's look at actually an example that I saw today. Right, so I don't want to just go in replay mode for you guys, so let's actually go over here. Well, it is nighttime now, but let's go to actually the 15-minute time frame and what we're looking at pre-market today. So when price market opened at 9:15, so let's go to replay mode. 9:30 right over here, and right over here. Beautiful right over here. We have a very nice valid SMT divergence, and look, we're going to zoom in a little bit. And as you can see right over here, price on the NQ chart, we came up. Same on the ES chart, we came up. As you guys can see, these are correlating pairs. Right over here, we have this high in question on the NQ. As you can see, price never took out this high. So in the last example, price took out the high on NQ, but remember guys, I said that doesn't matter. It doesn't matter which pair takes out the high. Bang, right over there. This high never got taken out. We got close to it, but we never took it out. That would have taken it out, but we never did. All right, so now let's look at the high in question on the ES chart. So right here's that high, so this is that same high. Now let's look at it and see if ES took it out. And as you guys could see when we zoom in, bang, ES took out that high. Right there is your SMT divergence, guys. So now let's mark it out. Template SMT right over here, SMT. And now, why is this a valid SMT divergence? And why did I use this one for my daily bias today? Right? You could have caught some nice shorts using this, right? Well, it's because look, we're in a higher time frame point of interest. We're in this 15-minute bearish fair value gap. Right? We're also in an hourly bearish FVG too. Let's actually mark out the hourly, right? So we're in this hourly bearish FVG. Bang, right over there. Right? Higher time frame POI. And now we could we also have a draw on liquidity, which is our London lows. Yeah, let's go back to pre-market right over here when price was trading up here. Now we also had this draw on liquidity, which was London lows, and this is actually the daily buys that I sent out here. Let me show you guys the daily buys that I sent out this morning. As you guys could see at 9:28 right over here, I sent out reason for bearish, London lows, draw on liquidity. So this was the London lows draw on liquidity, and then 1 hour, we're in a 1 hour bearish FVG. This is that bearish FVG that I had marked out, and we have that bearish SMT with ES, right? Beautiful, beautiful example that we used today. And what did price do right at market open? We absolutely dumped. We absolutely dumped and took out those London lows. Wait, actually not yet. All right, bang, right there we took out those London lows. Very, very nice dump. Very, very nice execution. All right, now let's also look at if we could get an SMT divergence, a bullish SMT divergence. So what I just showed you was an example of a bearish SMT divergence, right? But now, what did I also say, guys? London lows were swept, so that's a key level right there, key level of liquidity. And now let's see if we could find an SMT divergence for longs. All right, so let's play it out. Let's see if we can get an SMT divergence to carry out longs. Still watching. We have an SMT divergence right over there. Beautiful, right there. Can you guys see that right over here? We have these lows on NQ, never got taken out. Bang, right there. You see we had this low right over here. So let's actually mark this out properly, and let's do this in a live trade example, breaking it down for you. So on NQ chart, so we took out those London lows right over there. That's a key level. So if we see an SMT divergence at one of these key levels of liquidity, remember guys, we just took out London lows. London lows is what? A key level of liquidity. And now we know valid SMT divergences, if they happen at these valid levels, these key levels, these higher time frame POIs, then we know that those SMT divergences are valid. So right here I could see that we have a valid SMT divergence, right? So this is the low that's in question right over here on the NQ chart. And then that same low is over here on ES. Bang, right over there. Now on the NQ chart, we never took it out. But on the ES chart right over here, we did take it out. Right then and there is your SMT divergence. Now let's actually mark that out. Oh, not that. Let's mark out our SMT divergence just like that. Bang, and then bang. SMT. Now let's see how price actually plays out. All right, so let's play it out. Playing out. Okay, playing out. This was a very, very choppy day. Oh, we actually have another SMT divergence, an SMT divergence within an SMT divergence right over here. Another SMT, right? So this is very, very nice. Here's another low. So guys, you're gonna start seeing SMT divergence happening all the time. Look, so we have this SMT divergence, and then we have another extra confirmation of SMT divergences right over here. This is a low that's in question. Right over here, this is the low that's in question, and then on the ES chart, this is the low that's in question. All right, so we have that right over here. Now look on the ES chart, price took out this low over here. On the NQ chart, price never took it out, as you guys could see over here. Price never took it out. So what is that? Another bullish SMT divergence, right? So now let's mark that out. So actually, let's go right there. Boom, an SMT divergence within another SMT divergence. Beautiful, beautiful. Bang, right there. And what did price end up doing? We ended up pumping up. How much more did we pump up? Crazy. Very, very nice. We had this nice pump up, which was triggered and sponsored from these SMT divergences. So that right there is basically your SMT divergences. Now I personally use this as a confluence and extra, confidence to take my entry model, right? So when I see this happen at these key levels, I can expect price to be bullish, and we actually did take a bullish SMR setup today, right? Now, I didn't do it based off of the SMT divergence, but seeing this happen when I was in the trade today, it gave me more hope to let it play out, right? So we actually entered into this trade off of this fair value gap over here, and we were targeting these highs over here, and we were watching price trying to play out. And as you guys could see, we entered. It was a very super choppy day, but then I saw this SMT divergence, very nice, and we actually held all the way till here, and price actually hit take profit. So beautiful trade. But yeah guys, so that's exactly how you use SMT divergence, and basically this is the SMT divergence video that I wish I had when I first tried trading SMT divergence. And once you start using this and actually start using them and pairing it up with your strategy and using it as an extra confluence, your win rate percentage is actually going to shoot up by a couple percent, right? I used to have a 60% win rate percentage. This shot it up to around a 70 to 75%. That's a huge percentage difference, right? If anybody could tell you I can get you 10% more sales, 10% money of your monthly income, that's amazing. 10% on a funded account is insane, right? Think about it. You have a 100K funded account and you make 10% on that. What's that? That's $10,000. $10,000. Like, so you have to think about everything in percentages, right? Percentages are very important. Guys, SMT divergences are not just about chasing signals or it's always going to work, right? Nothing is 100% guaranteed when it comes to trading, all right? It's just helping you read the market through smart money eyes, giving you an extra toolkit to be able to add to your trading strategies, your trading concepts, your trading bag. But yeah guys, let me know if this video helped you out. Do me a favor, drop a like, comment SMT unlocked, and make sure you hit that subscribe button. I have a whole series of smart money setups coming up, and if you want access to full breakdowns and mentorship, just click the link down below in the description. And yeah, I'll see you guys in the next video. Tursonz out. Peace.